Target stock fell 25% this week as investors panicked and sold after they reported a negative earnings report. And yes, I said 25%. Seriously, you guys should have seen my face when I was scrolling through my phone at school and I saw that Target stock was down 25%. If you guys didn't know, I own Target in my long-term dividend growth portfolio, so this does impact me. But in today's video, we'll be going over the earnings, my thought, reaction, what I'm going to be doing to my position in Target, and much more. And guys, before the video starts, let me know in the comment section, what are you guys going to be doing with your Target shares if you own any? And guys, it would mean a lot to me if you guys could smash that subscribe button. We're 12 subscribers away from hitting our goal to the end of the year, which I'm so grateful for. I really appreciate it. Now that you've done that, make sure to also smash the like button, subscribe again, turn on post notifications, and of course, roll the intro.
Hello, I like money.
Now, let's start with actually looking at the earnings report itself. Target shares dropped sharply on Wednesday after the company said that its quarterly profits got hit by supply chain troubles, higher fuel costs, and lower than expected sales of discretionary merchandise. Just to throw in a little comment here, I think that these are all problems that Target and their competitors have to deal with, so that's something to keep in mind. I think if this was a problem specific to Target, it would be a much bigger issue for me personally. Target said it saw a healthy consumer but a shift to experience-based purchases such as toys for birthday parties and luggage for trips. Target also reiterated its revenue forecast going into the future. Now, onto the part that everybody's freaking out about. Analysts expected their earnings per share to be $3.07, but instead they reported at $2.19, which is a huge miss. But guys, we need to keep in mind that Target's EPS was actually bigger because, people had money from stimulus checks. They were spending more money at Target and other retailers, so I think that EPS was definitely overvalued and overpriced because of those stimulus and the extra money that Target got from that. But hey, on a brighter note, they did beat their revenue estimate. And actually, sales did grow from a year ago, so that's definitely a positive thing to highlight. Now, onto the other big part that caused Target to tank 25%. Their profits were down 52%. This is obviously ginormous. This is due to higher fuel costs, supply chain disruptions, higher gas prices. Their profit was also reduced because the consumers at Target are spending more money on the products that have less profit for Target, aka the basic essentials. In my research of Target stock, I watched multiple interviews with the CEO, Brian Cornell. And when the earnings report released, I immediately went to see his interview with CNBC. I was really impressed by him in his interviews, and I was really curious to see the tone of his voice during the earnings report and his overall, aura that he gives about the company. Now, here's that interview with him.
Quarter. What happened?
Well, first of all, Becky, I appreciate being here during a difficult report.
Right.
But it's a chance to talk about kind of our business and where things stand. And I frame it by really looking at kind of the front of the house of our business and then the back of the house. And if I think about the front of the house, the consumer guest-facing component, we saw really strong comps, over 3%, on top of 23% last year. And importantly, it was driven by traffic. Traffic up 4% on top of 17% last year. Guests are shopping our stores. They're enjoying our services. They're using Drive Up. But clearly, the challenge for us in this quarter was the back of house. From a freight and transportation standpoint, things have changed significantly from even 13 weeks ago. I did not project the kind of significant increases we would see in freight and transportation costs. And you've been talking about it on CNBC almost every day. I think yet again this morning you talked about all-time record fuel and diesel costs. Right now we project that's going to hit us about $1 billion of incremental costs in this fiscal year. So a significant increase that we didn't anticipate. The other change is in our category mix. While our comps grew by 3.3%, pretty balanced between digital and stores, we added another $1 billion in incremental growth in the quarter. The mix of the categories looked very different than we expected. We saw great strength in food and beverage and household essentials. Our beauty business grew by double digits, but we started to see some softening in some of the discretionary categories, including those big bulky categories, TVs, kitchen appliances, bikes, as the consumer started to shop differently. And I'll come back and talk about what we're seeing from a trend standpoint. That certainly impacted our mix and our margin mix, but it's also added complexity in our supply chain. Those big bulky items are now in our supply chain, not moving at the rate we expected. We had inventory that we would have liked to have had last year that arrived late. And we pulled certain inventories up early to make sure we're ready for the back to school and back to college season. So that's added additional complexity and cost in our supply chain. And we did not anticipate that kind of change as we were sitting here 13 weeks ago. So we own it, but freight transportation, a change in mix, and then the increased complexity in supply chain have added, obviously, pressure to our operating income.
If those things were not anticipated 13 weeks ago, what are you seeing now for the month of May? Is the consumer rolling over at all? Are any of these situations improving? How do you get your arms around it?
Yeah. Becky, thinking about the consumer right now, one, we've seen May off to a very strong start. American families celebrated Mother's Day. We saw record sales and fresh flowers and plants and things like champagne and gifting. Mom was recognized. And I really want to go back to some of those trend changes we've seen. It's a shopping change in how they're spending their dollars, but we're still seeing strong traffic and we're still seeing growth. A year ago, during the pandemic, we were buying lots of TVs for our homes, as many Americans for really the last 2 years have been working and educating their families from home.
Right.
Well, they're shifting from buying TVs to buying luggage. And our luggage business was up over 50%.
Maintain my own margins because of this?
Joe, it's been in the back of my mind is one, taking care of those guests and those families that depend on us for value and affordability each and every day. And certainly during a time of inflation, that's more important than ever. And taking care of our teams. So, we've been really focused on making sure we surgically and selectively pass on some costs where we can. But we've got to make sure right now we provide value for that consumer who is, again, still shopping in our stores and still using our site. So it's a balance.
So you won't do it this quarter either. You won't get prices more in line with your costs this quarter either.
We're still going to have some of the same challenges in the second quarter. We certainly expect those to moderate over the balance of the year as we rebalance our inventories and look at opportunities to improve efficiency. But we're going to continue to stay focused on protecting the consumer and those guests who shop our stores, provide them great value, because they are still shopping our stores.
Yeah.
And we're seeing great resilience with the consumer. I talked about TVs being exchanged for luggage. Those small appliances that were in everyone's shopping basket over the last couple of years, those are being replaced by consumers who are shopping for more toys. Because, Becky, right now, they're going to birthday parties for the first time in a couple of years.
Yeah.
So they're still spending. It's a consumer who comes to Target to shop all of our categories.
Yeah.
But we're seeing a shift in what they shop and
I think it's really important that Target isn't raising its prices right now and it's retaining its customer base, because typically when you treat your customers right during the tough times, they'll stay with you during the good times. And when there's good times for Target, that's a tremendous stock to own. I didn't see any panic in his voice or any really, huge concern for the company long term, which I didn't expect to see anyway. To be quite honest, I can view this honestly as a correction for Target's EPS. This is a 5-year chart of Target's EPS, and as you guys can see, right after that big red decline during the pandemic, they went up. That's because of all the stimulus money they received and all the extra revenue that they received. This was all that they used to reinvest back into the business, pay dividends, etc. Now, I think Target's stock is coming back to pre-pandemic, growth, which definitely isn't a bad thing because they were a great company before the pandemic. And if anything, that extra money that they got from the pandemic made them a better company long term. So Ryan, what are you going to do with your Target shares? Now, I look to hold all of my companies and my positions for at least 20 years, so I'm not going to be all concerned about, 3 months. I was actually tempted to buy some Target stock on Wednesday, but I thought it would be a smart idea just to let the news sink in for a little bit, see if the price goes up or maybe stays where it's at right now so the market reprices it. But guys, fundamentally, Target is still a great company. Their stores are packed right now. People are going to their stores still. It's not like nobody's going to Target anymore. I dare you guys actually go out to a Target, see how the environment is there. Look, the stores are booming. The problem with Target's earnings were that they were dealing with short-term problems that the whole country has to deal with right now, and all their competitors as well. I currently own 2 shares of Target, not including the reinvested dividends that I've dripped for 2 years now. And I'll definitely be looking to add some more to my position this month, and if it keeps falling. But guys, thank you so much for watching the video. It means a lot to me. If you want more stock updates like this, if any stocks drop 25%, you know I'll be making a video about it. Smash the like button, subscribe, turn on post notifications. I upload every Saturday. And of course, do dividend stocks, not drugs. Have a good one.